Well, China just scored a massive geopolitical win this past week as Brazil, South America's largest economy, has officially expressed interest to join China's Belt and Road Initiative. Now, this is a major deal that could transform the entire continent's future and something that China has been building up to for many years. Latin America is rich in natural resources, and China has been developing ports, mines, railways, roads, and everything else you can imagine to help expand its reach, and quite frankly, it's been an incredible success. At the turn of the century, China's trade with Latin America was only $12 billion, but fast forward to 2023, and that number grew to over $490 billion, representing an incredible 4,000% increase. Now, Brazil has always maintained great relations with China. In fact, the two countries just celebrated the 50th anniversary of diplomatic relations. In addition, China and Brazil are both founding members of the BRICS alliance. But when China launched the Belt and Road Initiative in 2013, Brazil hesitated on joining and has maintained that stance for the past 11 years. But why? Well, the reason is simple, and it's a strategy we often see used from nations who want to maintain good relations with multiple superpowers, in this case, the United States and China. While Brazil has been expanding its relationship with China, it has also maintained good relations with the US and EU, both of whom are important investment partners for Brazil. This strategy is called non-alignment and has been the key signature foreign policy of another founding BRICS member, India. But this is also the new multipolar world that we live in, where no developing nation wants to align with only one superpower exclusively. While the US is a great security partner to have, no one can compete with China in terms of manufacturing and trade. And in fact, I have two images that will absolutely stun you and help you realize why China will continue to have a dominant future in our global economy for many decades to come. This image shows what the world trade looked like in 1960, when the United States was the sole superpower. The US dominated trade, with Germany and Britain acting as regional subpowers. And did you notice where China is on the map? Nowhere. Because 60 years ago, China was one of the poorest countries in the world. But like Napoleon famous said, let China sleep, for when she wakes, she will shake the world. And that's exactly what happened. By 2020, China became the dominant trading partner for the world, with the US now taking the role of a regional subpower in terms of world trade. Make no mistake, this has been a strongly calculated move from China, who first opened its economy to foreign investment through Deng Xiaoping's economic policies and doubled down on expansion by building partnerships throughout the world. When Xi Jinping visited Kazakhstan in September 2013, he formally launched the BRI with the goal of expanding China's trade to every corner of the globe and using this trading network to fuel China's own economy for many years to come. Of course, you've probably heard the recent headlines that China's domestic economy is retracting, with the real estate sector cooling off and domestic consumption in decline. But because of the BRI, China's export business is thriving, smashing estimates and expanding, as China remains the chief global supplier for more than 120 countries around the globe. But here is where things get interesting, because something had to flip in the Brazilian president's mind to make this monumental decision to move away from non-alignment and finally express interest in joining China's BRI. And the answer can be found in Peru, where just 50 miles north of Lima lies an incredible new $3.6 billion Chinese port that will not only change the entire future of Peru, but also the entire continent of South America. China is achieving success on the global stage because it offers a very different product than the United States. While the US goes around the world promoting democracy and the rule of law, this largely means that when a US official visits South America or another developing part of the world, they come to give a lecture, and the local people receive nothing in return. This was even highlighted in a recent Wall Street Journal article entitled "China Makes a Port Play in Peru," where it states, "It's rumored around Lima that the US tried to stop the Chinese investment. Some pro-market Peruvians say the State Department undermines its own interest in the rule of law by spending too much time promoting left-wing causes and wokeism." Yikes. Wokeism is where common sense goes to die, and that's literally the last thing US politicians should be exporting to the world. Meanwhile, China offers the complete opposite: tangible infrastructure projects that have an immediate impact on the local economy. This new Chinese port will not only serve Peru, but also become the primary connecting point for goods from Ecuador, Chile, Colombia, and Brazil bound for China. Combined, The five countries last year exported about $135 billion worth of products to China. But here is where China is thinking two steps ahead, because the port will also become a hub for shipping out critical commodities like lithium, an essential element for EV batteries, which China is also the world leader in production. But most importantly, this new port will slash travel times for shipping containers between China and South America, boosting trade between the two regions. The Chansay port began construction in 2019 and is scheduled for its grand opening this November to coincide with Xi Jinping's arrival in Peru to attend the Asia-Pacific Economic Cooperation annual meeting. Peru's president, Dina Boluarte, traveled to China last month to finalize the deal with China's government and also announced that China's state-owned shipping company, COSCO Shipping, will be the exclusive operator of this new port. Now, you might think that China operating a port in a foreign country is a big deal, but the truth is that China owns or operates nearly 100 ports in over 50 countries, spanning every ocean and every continent. Simply put, global trade couldn't function without China, who not only dominates shipping, but is a major player in port technology, including cranes and logistics management systems. While in Shenzhen, the Peruvian president also met with Huawei executives at the company's headquarters. Huawei is a company that has been targeted by the United States in recent years and is currently banned in the US due to national security risks. But over 80% of the world's top 50 telecommunication companies partner with Huawei, and as they should, since the company is leading the world in 5G technology. Huawei signed an agreement to train Peruvian engineers in the field of artificial intelligence, another area where China is a superpower. And this is exactly what I mean. When you deal with China, you walk away with tangible assets that will impact your local community. But the Peruvian president took it one step further and made a trip to BYD headquarters, where she met with executives to discuss opening a BYD factory in Peru. BYD is the world's largest EV maker, and this will be another game changer for the Latin American market. Unlike the United States, which is locked into its protectionist mindset, imposing 100% tariffs on Chinese EVs and blocking US citizens like myself from purchasing China's world-leading EVs, South America has seen how China has transformed its highways, lowered its pollution, and helped the lower and middle class by providing access to affordable, environmentally friendly EV cars. Now imagine how important this will be for Peru if China's leading EV company builds a new factory there. Without a doubt, Brazilian President Lula has been watching his South American neighbor reap the benefits of its partnership with China, and this is why, after 11 years of waiting, he has decided to move forward and explore the benefits of BRI membership for Brazil. For the first time ever, Brazil has also been invited to attend the APEC meeting this November, and Brazil's president was quoted, "I have already decided that I will go because Brazil wants to enter this China world. We need to understand how we can integrate into the Pacific from a commercial point of view." Everyone, the world is changing. Trading partners are shifting, the US dollar is being used less in global trade, gold and crypto markets are on fire, and with the 2024 US election just over 100 days away, there is a lot of uncertainty moving forward. However, I want to tell you about today's video sponsor, which is DeFi Technologies, because it plays right into this multipolar world that we are living in now. Now, I first covered DeFi about 6 weeks ago, and the stock has been absolutely booming. It trades under the ticker symbol DEFTF, and at the time of this recording, it's up 250% the past 6 months, 190% year to date, and up an incredible 1,440% the past 12 months. I'm revisiting this company because many of you follow the crypto markets, and Bitcoin has also seen substantial gains in the past few months. With the potential for a Donald Trump victory this November, there is significant momentum. Let's update you on the latest developments. Firstly, the market cap is a major part of the story. Right now, the market cap is just over $450 million. But why is this company worth that much? The crown jewel of DeFi Technologies is its corporate structure, which provides shareholders with digital asset and Web3 exposure through their brokerage accounts. For instance, if you're interested in investing in Bitcoin or bullish on the future of crypto, this gives you exposure to the entire industry. DeFi Technologies operates like a holding company, owning numerous subsidiaries that create substantial value and generate significant profit, much like Berkshire Hathaway. One of their most valuable assets is Valor, a platform offering ETPs, Europe's version of ETFs, covering over 25 different crypto indexes. This has become a highly profitable part of the business as Wall Street, institutions, and sovereign wealth funds seek access to crypto. They can do this through Valor's ETPs, which yield 8 to 10% profit from assets under management, currently over 698 million. Another notable subsidiary is DeFi Alpha, focusing on identifying low-risk opportunities within the crypto ecosystem. Launched just a few months ago, it has already generated over $97 million in profit. Additionally, Valor's innovative products like the world's first yield-bearing Bitcoin ETP and the unique Valor Bitcoin staking ETP, which provides a 5.65% yield without the need to sell or trade Bitcoin, have created significant demand amongst investors. Now let me show you the management who is behind this company. The first is Olivier Roussey-Newton, who is the founder of Hive Blockchain Technologies, the largest Ethereum and Bitcoin miner in the world. You also have Russell Starr, head of capital markets for DeFi Technologies. In the most recent earnings call, he made it clear that the company is undervalued in management's eyes and will not be entertaining any offers to sell the company below $8, which is a great testament to what management feels this company is really worth. Finally, I want to mention one of my personal favorite people to follow in the entire crypto space, Anthony Pompliano, who is a person that I follow closely on Twitter and also subscribe to his newsletter to educate myself on all things crypto. Pomp, as he is referred to, is a shareholder and co-founder of Reflexivity Research, which is also a subsidiary of DeFi. And over the last couple of months, Pomp has been writing several deep dives about this company. It started in April when Pomp wrote this article entitled "The Stock I Would Have Pitched at the Sohn Conference." Pomp goes on to lay out a full analysis on why this company has so much potential. After that article, the stock started gaining traction, and he followed it up with another article entitled "This Stock Continues to Appear Highly Undervalued." I really enjoy Pomp's writings, and like I said, I read his newsletters often, and I'm going to link both of these articles in the description below so you can read them too. But here's where things get really interesting, because management and insiders own an incredible 45% of the stock. So obviously, the top management is heavily invested and incentivized to continue to see this company grow in value. Management is convinced the company is going in the right direction and is so undervalued that the management announced a stock buyback of 27 million shares, which is just under 10% of all outstanding shares. Overall, I think DeFi Technologies is an incredible company. It's making a lot of money and serving a big part of the future of our financial world. I'm going to make one final point here, and this actually came from a tweet from Elon Musk earlier this week when he wrote, "Where are we with the dollar value destruction, you might ask?" and shows this picture where he feels the US dollar is dangerously becoming devalued due to rising inflation, but most importantly, the rising national debt, which will soon pass $35 trillion and counting. Elon's exact quote on the matter was, "The dollar will be worth nothing if the US doesn't do something about its national debt." Now, most of you follow this channel for geopolitical insights from around the world, and we follow everything from the rise of BRICS, de-dollarization, and why gold and crypto continue to soar to all-time highs. If you are interested in learning more about DeFi Technologies, I want you to read these two reports from Pomp. Again, I'm going to link them down in the description below, and I'm also going to include the stock ticker, company website, and investor presentation for you to read more about. As always, please do your research before making any investments. And as always, thank you for spending time with me today here on YouTube. And if you're interested in learning more about China's efforts in Latin America, click here to watch our next video. Once again, thank you for your support, and I'll see you soon in our next video.